good to see everybody. Apologize for being the wrong time of day. I normally do this an hour later, as you know, but I have a conflict come up. And I also have this big gray hair that's popped up out of nowhere. I'm over it. I'm over this getting old thing. How y'all doing today? Happy Thursday. We will be trading today. Very stoked about that. And let's not delay any longer. Let's go ahead and pop into the PowerPoint. And we'll get started here. Welcome to the OVTLYR Trading Room. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. But before we start trading, let's get into the lesson of the day. All right, so be sure to stick around to see how we rank this video out of 10, and of course, subscribe if you haven't already. So let's take a look at this video. It's called Trump Invests $500 billion, $500 billion, top in AI, top 5 tech stocks to buy. Let's go.
Financial markets. That is a theme I think is set to continue. And today we just saw the latest development of this Trump effect. There was just a massive announcement about US AI infrastructure. Donald Trump, alongside OpenAI's Sam Altman, Oracle's Larry Ellison, and SoftBank's Masayoshi Son, unveiled the Stargate project, a $500 billion initiative aimed at revolutionizing the US AI infrastructure over the next 4 years. This is going to be a new company with big tech partners behind it. They're starting with a $100 billion deployment of capital in 2025, which has already started by building a 1 million square foot data center in Texas. This investment is expected to create over 100,000 new jobs this year. And this is just not some normal tech announcement. It's
Hey, how about that? AI is not taking away jobs. AI is giving us jobs. I'll take that.
potentially the biggest investment in AI ever undertaken in the United States, with names like Oracle, Microsoft, and Nvidia already in the mix as partners. In this video, I'm going to discuss how this may impact investing in US tech companies, and I'll share a list of the top 5 stocks that may benefit from this news. That will include a brief stock analysis on each of the companies. But remember, markets can get swept up in hype, especially when the word Trump is involved. So let's try and stay grounded and focus on fundamentals. Is this a massive opportunity for investors and the United
No, don't focus on fundamentals. Only price pays.
States in general? Let's find out and roll the intro. My name is Zach. This tool, which is available, focus on investors' perspective on news events like this Donald Trump Stargate announcement. It also has an in-depth stock screener where you can find companies based on hundreds of different limited times. So at least the current build out of AI infrastructure is insane, with hundreds of billions of dollars being spent already. That comes from hyperscale cloud companies like Microsoft Azure, Amazon Web Services, and Google Cloud. Other big tech companies like Meta, Tesla for their self-driving, and Elon Musk's new XAI, which is just scratching the surface. And in terms of what this actually means in the real world, this money is going into training new models, which will be more intelligent and cheaper for use. And even what we already know is possible with large language models and generative AI, there is possibly trillions of dollars of opportunity. And you could argue that that itself could be as big as the internet or the industrial revolution. But then if we want to get a little nutty, but it's not even nutty because it's real, there is the long-term opportunity that you could build artificial super intelligence. And when we start to combine these things like the Trump effect plus the whole AI industrial revolution, then there definitely could be the risk of some stock bubbles. But today I'm going to try and take a step back and give you a grounded, full picture stock analysis on some of these companies which are directly impacted from this news. And stock number 1 that I will be sharing today is Nvidia, ticker symbol NVDA. And you can basically think of this as the most dominant AI semiconductor company.
Of course, yeah. Nvidia is the one that everybody's been following for ages. Let's go to Nvidia real quick. NVDA. Oh my gosh, it's going so slow. Let me refresh the page. What is happening? It's taking ages. What is happening right now? Here we go. Okay, fine. John James is here. Alan Clark, good evening. Wes, his wife made dentist appointments. His wife has ruined his life, but I'm glad he made it for at least a moment. Okay, Nvidia's here. So we've been talking about this for a while. Nvidia created this order block right here, and this order block is providing to be a ton of support. As you can see, it's gone into a 1, 2, 3, 4, 5, 6 times it has found support at this area right here. Order blocks are basically voodoo, basically magic. And it is so cool to be able to have this on our charts. I need to switch the view here real quick. Back over to Nvidia. So yeah, I can absolutely see a ton of support building up for Nvidia. It does have the OVTLYR trend template showing to be bullish. You got the 10 over the 20, price over the 50. So far we're off to a good start. If we go into let's go into OVTLYR. Let's go to Nvidia real quick. Takes a second to load, of course. Let's pop open the news while we're waiting here. Got some positive news coming out of Schwab Network, some negative news coming out of CNBC. Motley Fool, positive. Schwab Network saying neutral. That was yesterday. So mixed reviews on the news, but we did get a buy signal. Where do we get that buy signal at? Got that buy signal December 27th on Nvidia, which was right here. And from here to here, up about 7% or so. That'll be all right. But also, I really like to look at the fear and greed map down here. How much greed is there? How much fear is there? And you can see the fear is leaking out, and it's definitely starting to get a little bit more greedy right there, which is what we want to see.
Their chips are the main backbone powering all of these data centers. And you can see that the company benefited massively from the AI boom coming out of 2022, and their earnings have just surged to an insane amount. Because again, I need to reiterate, the stocks are backed by real businesses. And over time, the value of a stock will reflect.
Wait a minute, what? Stocks are backed by businesses? No way. Look, a lot of the time, it doesn't feel like it. It really just feels like it's a game we all get to play. I guess it is nice to have that reminder.
To the earning power of that business. As you can see, nearly all of Nvidia's revenue comes from their data center business, and that has powered all of this growth. And just in the past 2 fiscal years, they have grown that business from $3.8 billion of quarterly revenue to $30.7 billion in the latest quarter. So if you're analyzing Nvidia stock, all of your focus needs to be on projecting the future growth of that data center business. And
I disagree. If you are analyzing Nvidia stock, who cares? I know I get lots of hate on the internet for that, right? But it's like, who cares? All that matters is price, right? You can analyze it till you're blue in the face. Will it make a difference? Probably not. The only thing that will make a difference is the price going up, right? Because, I mean, you could analyze the shit out of it right here, and then it went up. And you could analyze the shit out of it right here, and it went sideways, right? Analyzing the fundamentals gets you nowhere. It literally gets you nowhere, right? And I get so much hate on the internet for this. But only price pays. Only price pays. Write it on my tombstone. Only price pays.
And really what you need to remember here is that all of Nvidia's revenues and profits are the cost of another big tech company. You have Microsoft massively increasing capital expenditures to now over $49.4 billion over the trailing 12 months, growing significantly.
Okay, he has a point there. I like that he brought that up. All of Nvidia's revenues come from another company buying something from Nvidia. Fair point there.
On a quarterly basis at $14.9 billion in the latest quarter. And the Microsoft CEO has stated that this is likely to continue to grow. And a large chunk of that money is going directly to Nvidia. You have companies like Tesla growing their CapEx to build self-driving AI data centers, and a lot of that does go to Nvidia. Alphabet is growing their CapEx for Google Cloud. And by the way, all of these companies do have their own chips, but still a lot of that money ends up going to Nvidia because they are the market leader. Meta spends a massive amount on their data centers at $8.2 billion in the last quarter, and they are one of Nvidia's top customers. And when people are analyzing Nvidia stock, the number one question is how big that data center business is going to be in the future. Is it going to continue growing at a high rate for years to come? Is it eventually going to slow down and reach a larger steady state? Or is this a hype cycle and it may fall off? Those are the questions which impact the multiple you would pay.
I got to tell you, there's been a lot of hype cycles right now lately. I mean, just take a look at the YouTube videos we cover, right? You've got whole channels devoted to pumping one stock, if it's AMD or SoFi or whatever. I feel like the irrational exuberance, big words of the day, the irrational exuberance is really strong out in this market right now. I even had somebody in leave a comment that was like, "You're so stupid sitting in cash since November. The market has been in such an amazing opportunity." Let's go look at that market real quick. Actually, the market's been trading sideways since that point. The market has been choppy McGillicuddy, right? It's not done a whole lot. And I didn't either. Cash is a trade. Always remember that.
Pay for Nvidia stock. And this new Stargate announcement pretty much answers the question that the US is going to be investing a lot in AI infrastructure for at least the next 4 years. And as long as this plays out, Nvidia is going to have a lot of continued high demand for the chips. So if you're bullish on Nvidia stock already, this news should make you even more confident in its future. For stock number,
let me ask you this: are you bullish on Nvidia stock? That's what I want to know. I'm indifferent. I really don't care. And that's the mentality you need to have as a trader, right? Maybe if you're a long-term investor, by all means, you want to hold Nvidia for the rest of your life, go for it. I'm indifferent. And that is a strength and something that you're going to need to develop if you want to be successful in this business. Because if you decide to be bullish on a stock and it turns around and it goes down, it's exactly like one of my mentors, Mark Minervini. I'll show you the slide here real quick for it. It's exactly this, right? If you're bullish on the stock and you've set your price targets $20 to $5 up from where it is right now, right? And you're so stoked and you buy the stock and then it goes down, right? It goes down right here, knowing that you should sell to save your capital, but you're like, nah, you know what? I'm a long-term investor. I'm going to hold this, I don't know, until my kids graduate college, because then it'll be definitely worth a ton, right? Not necessarily. There's no guarantee that when you're in a downtrend, it will ever stop. There's no guarantee of that. But you're afraid to sell because it's going to look something like this. But what actually happens is you get caught in these awful, ugly down moves. Tell me that's happened to you. I know it has. I know that that's happened to you. And it's definitely happened to me too. That's why when you look to trade, have a trade, have a plan in place or where you're going to get out before you even get in. We're going to be putting on some stocks today, and I will tell you exactly where I'm going to get out before I get in. Easy. And I'm not going to stress about it either. It's going to be great. John James says it's happened to him. Hey, Mari's here. Everybody be cool. There's a girl in the chat. I haven't had lunch, so I'll step out soon, but you'll watch it later. Cool. And it's happened to John James multiple times. Dude, I know. You're not the only one. Okay. This is common. This is why people struggle with trading. Is this right here, right? Knowing you should get out because it's going down, but being afraid it's going to turn around and go up without you. And then you end up losing 2, 3, 4, 5x, which you had hoped to lose when you originally put it on. So my stance on Nvidia, I would say it's bullish right now, but it could absolutely change. It could absolutely change. I did have a lot of people commenting as well about SoFi, because I was saying, as it was in this downtrend right here, right? The 10's under the 20, prices under the 50. I said, look, it's trending down. Like I have no skin in the game. I don't care if it goes up or I don't care if it goes down. And then it turns around and I was like, well, I'm cautiously bullish at this point, right? Because it did have the 10 over 20, price over the 50, but it's headed right up into this order block. And I even put this out on my community post yesterday. This order block is textbook rejection once already at it. Textbook, right? Now, will it cross over? I don't know. I don't really care. I would not trade this. If it goes over and above, yeah, I would be way more interested. But right here, these are large institutional orders waiting to be filled. And if you hold it up into that, your order could be the one that they're looking for and then crush you right back down, right? This is a perfect example of what it looks like going up into an order block. And this is what it looks like when that order block acts as support. Don't tell me these don't work. Don't tell me these don't work. It's not guaranteed, of course, but don't tell me they don't work. Mr. J, it's finally nice to catch you as well, my friend. First time I've seen you here. So I do want to get to trading. So we're going to push forward on this video real quick. Where's my slide? Give me just a second here. All right, let's rank this video. I really didn't give it a shot for him to give too much information. I'll give him a 6. It's a passing grade in this case because nobody gets a 7. But let me know in the chat what you would rank it as. Like I say, he could be going into great detail, but we got stuff to do. We got some trades to put on. So, of course, let's get into it. Well, hello, Dave. Good to see you. Let's get to today's member highlight after I find the button. There it is. All right, so our member highlight, I love jumping into our Discord, talking about who is talking about what over in the Discord here. Got a couple new people dropping in, making sure we say hi to everybody. And there is a ton of chatter going on, right? Basically, I said the master key's unlocked, let's freaking go. And everybody's excited about it. John James is here, Zap is here, Angry Baker's here. Let's see, there's so much going on, I won't be able to capture all of it. But I'm just super stoked that everybody is in here participating and making OVTLYR better, right? That's our objective here. And that's why I pull it up, right? Is to showcase, listen, we understand that we have this opportunity to create something really special. And I'm so stoked to be able to do this with you. Rugby Nut was saying, the only problem is in the UK, it's live stream way too late here. I have to watch the recording. Loving the platform. The only blocker for me is joining full time and the difference and not being able to participate in the live stuff. Unfortunately, Rugby Nut, I like to trade in the last hour of the day. Had to go a little bit earlier today because I do have a conflict here at the top of the hour. But I would normally wait for it to even be a little bit later. So apologize for the time zones there, but that's how the market works. So let's continue on. And of course, share your stories in the Discord. And the first rule of OVTLYR, there we go. First rule of OVTLYR, you should tell everybody about OVTLYR. John says 6. Alan says 5. Alan says, what time frame do you use for order blocks? Sometimes I see them in different time frames in different places. Good question. And you will see them in different time frames at different places. So if we go to, this is the daily chart for Nvidia. If I drop into the 5-minute chart, we're going to have different order blocks, right? Don't tell me order blocks don't work. Don't tell me order blocks don't work. This one created this morning once, twice. There it goes. So as you change the different time frames, they'll give you different results on those order blocks, right? Because here's another one here, even on the 1-minute chart. So there we go. All right, so let me catch up on the chat one last time. Would VST be supplying power to the Stargate since it's based in Texas? Is that why Nancy could be buying? I don't know. I don't look at that kind of detail. It's just, is price going up? Let's go. Gerard, there we go. Sorry. Sometimes I can't read English. Gerard, I am so glad you're here, and I am very impressed by that mustache, my friend. Angry Baker made it too. Stoked you're here as well. Looks like you're smoking a stogie, having a nice drink. Glad you're here. All right. Let's move on and hit the like button if you haven't done so already. Now back to trading in the outlier trading room. So what is outlier and how does it work? Well, old Uncle Warren would say, be fearful when others are greedy, and greedy when others are fearful. An outlier shows you when investors are acting irrationally fearful or greedy, and by how much, allowing you to get into the stock before the outlier move happens. And you can save 64% on the annual plan for just 82 cents a day by getting it by the end of the month. Now, my style of trading, I call the golden ticket trading strategy. And you have not seen this since November 21st. But it is unlocked today. Let's go. So it always starts with the market, the 10 over the 20, price over the 50 on the SPY. So let's go to the SPY. Now I'm going to go hard. I'm going to go fast. If you have questions, drop them in the chat. Like I said, I do have a conflict at the top of the hour. I will try to answer as many questions as I can, but this is absolutely execution time, right? We've been waiting, and now we got to roll. So we got to go hard. So the SPY has a 10 over the 20, price over the 50. It's inside this double order block right here, which gives me hesitation. It absolutely could be some resistance overhead right here. So we do have the trend pushing up 10, 20, 50, but this does give me a little bit of hesitation. I wouldn't say we're getting to new all-time highs tomorrow. We'll see. Next is market breadth. Market breadth has been so strong. Let me go over to the full stocks. This is the percent of stocks that we have on our bull list, the percent of stocks with buy signals. And if I pull this over here, you'll see that the market breadth had been growing since January 2nd. January 2nd was right here on this candle here. That's when the market breadth started growing. It leading indicator to get you to know, hey, the market was going to go up ahead of time. So the market breadth has been going up. Now, here's a key thing though. And I mentioned this on yesterday's live stream. There's a chance that I may only get a couple days before I'm back out of the market. Why would that be? Because right now it's sitting, in fact, let me make this bigger. Up here, you're going to see the details pop through. It's sitting at 73% bullish. Okay, 73% of the stocks we cover have a buy signal today. My rule is that once it gets up to 75, only enter if the breadth continues to rise. So if it's 73 today, 74 tomorrow, 75, 76, 77, 78, and then back to 77, I'm out. I am out. Halt trading once it changes direction, once it's over that point. That's why I say it may not be very long before I have to get back out. And then it's super cyclical, right? So it may only be a couple of weeks before it comes back around. And you can see the market breadth is very, very cyclical. But when it reaches a point like this, we might be looking into an overbought category or an overbought time here. But you can still get in as it's going up. Just cut your risk even tighter. Keep your risk even tighter. So we have the SPY signal just turned to a buy signal today. The market trend is trending higher. Market breadth is bullish. Sector breadth. I went through this morning and let me real quick. 2 seconds here. I went through this morning and did the legwork. Only 2 sectors I would consider bearish right now. That'd be energy and materials. Everything else is bullish. So that unlocks a ton. So next, we go to the next step here. If I had a trade on, I would be looking to reduce risk before adding new trades. I don't have any trades on, so we're going to go to the next step. These are my exit criterias. Like I said earlier, I know exactly where I'm going to get out before I get in, and we're going to mark it on the chart. Next is the screener. So we made some changes to the screener, and let's pull that real quick. I made some upgrades to the screener since the last time I traded, so let's go through those real quick. I'll show you exactly what my screener looks like. So Outlier Bullish 2 is mine. Unfortunately, it's not a shareable asset that I can like click over and send to you. Honestly, when I made this earlier, I meant to delete my Bullish and then rename that Bullish 2. I'll do that later. But for the sector, I leave it wide open. Industry is obviously going to be wide open as well. Outlier signal return positive. Capital efficiency wide open. 30-day average volume, I want it over 1 million. Current signal, I want it to be a buy if I'm going along. Price change over the last 5 days, I want it to be less than a 5% change. Up or down, just a 5% window over the last 5 days. I don't want a big move before I get into the stock. Market cap, I leave wide open. Price target, I actually am a snob. I like stocks that are at least $20 or higher. So I leave it $20 and open. Now, on the heat map value, you're familiar with the heat map at this point here. I want to see everything that's not the most greediest, right? It goes from 0 to 50 on the greed, 0 to 50 on the fear. I want it to be basically 90% of that. So I leave it all the way open on red, all the way open on fear, and up to G40 on the greed side. On the heat map, this value here, as I talk about all the time, I want to see my heat map continuing to move up if I am looking to go long a stock. So heat map moving up. An overlay indicator, that's this right here. That's the outlier trend template that you're very familiar with. The 10, 20, 50 is already green. So with all that on there, you can hit apply filter. And I would also want to point this out. If I'm going too fast, feel free to return to this video later. Rewind it, pause it, check it out again, right? Don't feel pressure to keep up. I've been doing this for 15 years, so don't feel pressure to keep up. Marco's here. Good afternoon. Hope you had a nice vacation, lots of fun. Finally found time to join again. Well, I'm glad you made it, Marco. This is not our normal time, but we're going to make it work. So there are 1, 2, 3, 4, 5, 6 that fit this criteria today. Of those 6, one of them is in a bearish sector. I already did the math behind it, right? So that would leave, oh, and the ETFs. Let me go back over here. Do this for stocks and ETFs. So basically the same thing. I do have one filter in here. Where's it at? I don't see my filter right now. Or was it right here? Where? I feel like it was State Street Global Advisors. Yeah, State Street Global Advisors. I don't know why my filter wasn't on that. Hang on. Those are the ones like XOK, XLV, XLF, XL whatever. And so, yeah, these are the ones I want. That needs to be part of my screener. Let me save this. See how easy it is to save it? And I'll update that later on. But I just saved it, so I keep it. Okay, so those are the ETFs for the day. And I dropped them into a quick little spreadsheet. That way I can just copy them over into TrendSpider. Now I copy them into TrendSpider to check for a couple things. That's this same list right here. This. Run the stocks through the simple chart scanner. First, I make sure there's no order blocks in our way. There's no earnings in the next 3 days. The 10, 20, 50 is trending the way we want to go, and it's above the prior day's low. Okay, that's all I'm looking for. TrendSpider does show earnings, so let's go to one real quick. I'll show you what I mean. See this orange brownish line right here? That's my earnings date, and I don't mind trading up into earnings, but I don't want to trade at earnings. Right? You can make a ton of money trading up into earnings. So when I run this filter, I'll click it again right now, making sure it's fresh. When I run this filter, CNP comes through, HSBC comes through, no order blocks ahead, and then RCL comes through. Now, I wouldn't trade RCL because it is staring at an order block right there. It may go up. It's only got 3% until that point. It's not what I'm really interested in, but CNP, I think someone in the Discord mentioned that there was an order block. I don't see that order block. So I'm going to continue on as if it's not there. And HSBC are 2 I'm interested in. So the next step is to start with the highest back test and work our way down. So CNP, HSBC. let's go back over to stocks, and I'll show you that back test I was talking about. C&P has an outlier segment return of 17%. HSBC has 48.51%. So I'm interested in starting with HSBC, maybe C&P. So the heat map. Confirm the heat map's not already installed. Actually, this is an improvement in our screener, so I no longer have to do that. I'll fix that later, but I'm going to strike through it right now. Option chain liquidity. Okay, so let me introduce you to Tradier. So I keep 2 accounts. I always keep 2 accounts. I've always kept 2 accounts. The one you're going to see is a personal account that has literally $0 in it. Okay. You can try and find the account number on there or whatever, but there's going to be $0 in it. So go for it. The other screen that I'm going to be putting this on is my business account where my money's at. Just full transparency. That's what I do. That's what I've always done. So let's go first to HSBC, and I'm going to start at 21 days to expiration. Now, I'm new to Tradier. I've only been using it a couple days. We do have a really smoking deal with Tradier. Let me see. Hold on. I'm trying to find the deal. I want to show you real quick. If you are looking for a broker. Yeah, this is it. Okay. So if you are looking for a broker, you can get unlimited commission-free stock, ETF, and options trades. Total savings of nearly $500 in the first year. You'll get 6 months of Tradier Pro for free. Plus, this is epic, $150 reimbursed by Tradier when you open an account with them and get an account with Outlier. How cool is that? When you have an Outlier account and you get a Tradier account, you're going to get Tradier Pro for free, commission-free trading, and they're going to give you $150 reimbursement. And look at that guy. Handsome guy right there. So you definitely want to check that out. I'll drop this in the chat right here so you can get to it. I literally just Googled Tradier Outlier, and that's how I got there. So with that out of the way, let's go to, who was the first one we were going to look at? I think it was HSBC, but I'm going to double check. I always got my plan right there. HSBC at 48.51. Open this back up. HSBC. There it goes. Make this bigger. Now I'm going to show you what I look for. So the parentheses right there denote how many days until expiration. I generally only trade the monthly contracts. There are weekly contracts on pretty much everything. That's all I'm ever looking for. You can go in like this and see different things, but I'm always looking for the monthlies. That has the most liquidity. That's why I go there. Start at 21 days to expiration. So at 29, that gets us in the ballpark, or 57, which is too far. So I'll start at 29 on February 21st. 250 plus open interest. I have found volume to be incredibly unreliable as a liquidity indicator. So I have used open interest for years, and it has never failed me. So open interest is who wants to transact with you, right? How many contracts are there ready to roll today, right? So looking at this, I always trade deep in the money calls. If I look deep in the money and I look at the delta, generally start at 80 delta. So it's usually around 80 delta. I'm looking for 250 plus open interest. I'm looking for the bid-ask spread to be less than 50 cents and 20% or less on the extrinsic value. So that's a lot of words right there. Delta, right around 80. Okay. So there's not an exact 80, there's 75 and 82. If I go over to open interest, there's 107, 137. Neither one of those are greater than 250. So I would look to go up to the 85 delta at 1267, tons of liquidity. The bid-ask spread right now is 30 cents. So that's within my criteria there. So what I'd look to do is click the ask button. That's how you would buy the contract, not sell the contract. It makes a hellacious difference if you buy or sell it. And before we actually look to put it on, let's calculate the extrinsic value. So the extrinsic value is what will decay to zero no matter what, every single time, forever on every single contract. So if I look at, where's it at? Here, extrinsic value of 40 cents, so 0.4, and I divide that by the cost of the option. So I always go with the ask value. That gets me 8%. 8% of this will decay. Okay. If you go to at the money, that's 100% of it will decay, right? So I'm only going to look at 8% of my theta decay, which is great. So I'm very interested in this. I don't see a reason not to. And so let me do a couple other things. 250 plus, 50 cents, 80 deltas, 85 delta, 20% or less. So we're good to go there. Now you need to calculate position size. I have a spreadsheet for you that I would really recommend you go pick up. So go in the Discord, go over, let me remove myself, go over here into the VIP Investors Toolkit. Scroll up, and you're going to find one that's called Power Scanner right here. This, click that button. It's going to prompt you to create a copy, and it's this right here. It's this position sizing document right here. In fact, let me make these columns a little bit bigger. And it will do all the math for you. This is really important. You can have the best trade in the world, but if you blow it on your position size, you could blow out your account, or you could have a winner that means absolutely nothing at the end of the day, right? So this is really important. And that's why when I do this, it's at the peak of the pyramid. It's at the bottom of the funnel, right? Before I do anything, I want to make sure I am set up on my position size. So I'm going to go in, and all you have to do, these are example numbers here, is type in your account balance, how much risk you're comfortable with per trade, and the approximate option delta. So I would look at HSBC, and then this should fill in. So the current price is $51. The ATR value, the average true range, let me show you what that means. The average true range over X number of periods, so 14 here. My calculation is at 67, I think it said. Yeah, the calculation here is 64, just some rounding here or there. That's the average price movement over the last 14 periods. Now this matters because it helps calculate position size. So if it's got a big ATR, it's got a lot of volatility, you can trade smaller. Or if it has a small ATR, you can trade even bigger. Now, I actually built a couple enhancements to this morning. So let's say we could look at Tesla, and we could look at Coke on this as well. I just typed in those two numbers right there. Now, if you're going short, you need to type in short, and it'll flip all these numbers here. But you see, HSBC has 67 cents on the ATR. Tesla has $23, and Coke has 90 cents. Now, this is very different position sizing, right? 46 contracts, 1 contract, or 34 contracts, yet your total risk between the entry point and a half ATR down is consistent. Your total risk is consistent, and it's not even close to 5%. So you're probably thinking, well, how does that work, right? How can it be consistent? Because we're sizing it based on volatility. And the way that I built it is it even gets even more conservative right here, because it's not $5,000 of risk, right? That would really blow to lose 5% of your account. So I'd even built it to be more conservative than that. But that's how you can get the same risk using each one. Now, it's just this formula right here, put in a spreadsheet, which makes life a lot easier, of course. So I'm going to delete these. So this would tell you your position size. So go grab that spreadsheet so you can get the appropriate position size, fill in what you're comfortable with here. And I'm going to pull this up, and I'll tell you exactly where I get filled. So I'm going into my business account on the other screen, pulling up HSBC February 21st. This is the 47 calls. Looking to buy them. I know exactly how many I need to get. And I'm going to hit submit. Filled. Bill price was $4.85. Okay, so that was my price right there, $4.85. So now I'm going to go into the Discord, put in exactly what I did. It has been a minute since I've done anything in here, so I gotta find my little template here. Oh, here we go. No. Hang on, sorry. Trade number. One. There we go. That's still not what I want. Trade number 1, bought. There we go. Now I'm going to use that as a template. Okay. So Today is 1/23/25. Trade number 1 bought the February 21st, 47 calls. So 2/21/25. This was HSBC. 47 calls. 485 was my fill price, right? Yes, 485. And HSBC is currently trading at 55 or 51.45. There we go. Let me jump to present. Perfect. Okay, cool. Now, real quick, we will continue on, and then I'll go into the charts and update those charts. Oh, somebody hit the thumbs up already. So let's go to the next one, and we're going to repeat this process here. So this was HSBC. I'm going to add this to my main list so I can keep up with it. Okay. CNP. What I was talking about earlier was I want to make sure it was above the prior day's low, which it is. So I'm good at this point here. So CNP, let's go look at the option chain for CNP. Okay. Now we're in the option chain here. You can see a lot more open interest in the calls in February. Mark got a question. Doesn't matter if one trades options or by the real stock, but that's no, dude. I mean, you're going to get to the same place. I'm just going to have more leverage than you. But yeah, I mean, if you wanted to just do stock only, by all means, go for it. You do you. Okay. So looking at this, I see a 90 delta. I see an 84 delta with 248 contracts. And I see a 75 delta with 2,000 contracts. I am interested in the 84 delta at 248, but if I'm going to choose between the two, so let me highlight both of these. To choose between the two, let's look at the extrinsic value, right? Because one of them costs, 50% more than the other. So let's say the extrinsic value of 65 cents. No, that's not it. Let's go up on 40 cents on $1.90. So 40 or 0.4 divided by 195. It changed a little bit. Is 20%. So that would fit. That would work for me. It's only 5, 10 cents, 15 cents wide. I would pay, how much less is that? 50% less. Or I could go up. 248 is close enough. I would work with that. 24 cents extrinsic on 275 is roughly 10%, or 0.22 divided by 2.75. So that's 8%. I would be more inclined to go with this one because we're going to get very close to the same result here, but money out of our account, capital expenditure here, 50% less. So that's the one I would go with. So that would be the CNP, February 21st, 31 calls. Oh, let me keep that back up, actually. CNP, February 21st, 31 calls. And let's see where I can get filled. Fill price $1.85. Nice. Fill price $1.85. I'll take it. All right, so let me drop that in the chat. A little bit of time, so we're okay there. Trade number 2. Bought the same expiration, CNP. That was the 31 calls. Got filled at, was it 185? Yeah. 31 calls at 185. And CNP is currently trading at 32.48. Cool. So now I'm in. Where the heck am I going to get out? No problem. Watch this. Where am I going to get out? Watch this. So going back to my exit rules here. If the 10 EMA is broken, or a half ATR, basically stop loss point, if there's an order block, if the outlier heat map stalls, or once I've rolled it, which after it goes up 1 ATR, I'll look to roll the options. Then I get really aggressive and close below the prior day's low. So let's first set up our half ATR from entry. So let's open this up. Let's go to HSBC first. I told you we go hard and fast. HSBC. I'm going to put right now. Price I got in was 51.45. So I have a little shortcut here, 51.45. and the, I already knew my position size, sorry, CNP. So this is what I wanted to show you here. As you can see, the half ATR, the 1 ATR, everything right there. It just makes it a little easier to calculate. 32.16 is a half ATR down. 32.16. Oh, that's not right. That was on CMP. HSBC is 51.11. 51.11 is a half ATR down. That's my stop loss point. If it goes under that point at closing, I have to get out. That's my one and only stop loss point. If it goes up, 52.11 is 1 ATR up. $52.11. And then again at 52.78. Very good. So like that. Now, the reason I put all these lines on here is A, I want to know where I got in. B, I want to know where I'm going to get out if it doesn't work out. Okay. And I also want to know if it reaches 1 ATR or 2 ATR, I'm going to be rolling my options. Rolling options allows you to keep the trade on and take some capital back out of the trade. You're taking partial profits right off the bat, but you can keep the trade alive. So that's a really cool thing. It doesn't always work out like that, of course, but I need to know when that happens so I can be aggressive on my options right there. So the other thing I need to look at is when the outlier heat map stalls. So I actually went in there already and I set an alert to tell me when there's no heat map change, right? We know the heat map on here, right? When there's no heat map change, send me an email. Or when a new buyer sell signal comes through, send me an email. So that's really handy. I like that a lot. I know Mahesh is about to adjust this because when I get in, I want to only give it so much room for my profit target in this case. So let's go to HSBC. Let that load. Catch up on the chat here. Okay, Marco's talking about stock. Do you? No, I don't check any news. I have literally no news whatsoever. It doesn't matter to me. Honestly, it doesn't matter to me. As long as price is moving, that's what I care about. Okay, so the current heat map value, you can see it right here, or you can see it right here, is G21. So in my exit criteria, if it's between G0 and 25, I'll give it a 10-point spread, meaning I'll look to get out at G31. So until Mahesh updates the alerts, I'm going to put on here, exit or sell into strength at G31. All right, so I know once it reaches G31, that's an exit signal for me, right? Now it could continue on without me, and that's fine, but I want to make sure I capture my gains and get out of the stock before it reverses. So we've done HSBC. Now let's do the other one, which was CNP. Let's go into CNP. Let's go into the CNP chart, and let's fill this in real quick. So value here, CNP, FATR down. Oh wait, where did we get in exactly? 32.48. 32.48, perfect. Okay. Next, half ATR down is 32.14. Now, this is not my all-time must get out stop out point because the 10 ATR or the 10 EMA is above that half ATR down. So if it closed under that 10 EMA, I'm out, right? It's not all of these. It's if any of them, if any one of these is triggered, I got to go. I got to bounce. But just put it on the chart there. So the 1 ATR up is 33.19. And then 2 ATRs up is 33.89. There you go. So that is my plan. Like I said earlier, I know exactly where I'm going to get out before I get in, right? Of course I did a couple minutes later, but I knew my exact exit points before I got in. So let's look, one last thing will be the outlier heat map. And then let's go ahead and set alerts too. Close this, close this, close this, close this. I don't think I need to do anything else here. No. Okay. Close this, close this, close this, close this. Okay, C and P. Current heat map value is G26. So I'm only going to give that a 5-point spread. What we found is that the further it goes, the more likely it is to snap back. Think of it like a rubber band, right? If it's down between, in this area down here, it's unlikely to snap back. It's when it gets to these extremes up here that you could see the extreme move and the extreme snap. I want to avoid the extreme snap. So when it gets above G25, I give it just a 5-point spread. And it's currently at G26. So I'm going to say sell into strength at G31. There. So that is going to cover it, right? I told you there was going to be a lot to do today. I wasn't lying. We put on 2 trades. We know where we're going to get in and where we're going to get out and why. That's the most important thing. Why would I get in? Why would I get out? I don't care about the fundamentals. I don't care about the news. That doesn't matter because only price pays. You got to remember that at the end of the day, only price pays. So thank you so much for joining me today. Of course, tell me in the chat what you're trading and come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. And of course, let us know if you need anything over in the Discord, and have a fantastic afternoon. Thanks so much for joining us. We'll talk soon.